Hey, this is Jon Johnson with Gabriela Cernas-Frantz, and this is the Mortgage Market Mastermind with our special guest today, Sean Miller.
Thank you for having me.
Nice to have you, man. All right, so this is going to be the last one for the year. So we're going to go over a lot of topics. A lot of things have happened in the past 30 days or so. So we're going to get into this. We're going to try to knock out as much as we can as quickly as possible so we can keep you all informed on what's happening in the market. So step one, the goal of this YouTube page, the goal of my business is I'm trying to help people to become debt-free through home ownership. So buy a home. Now, if you own a home, be able to refinance, hopefully to be able to pay off all your debts. And then the final goal is hopefully getting towards a 10 to 15, 20-year mortgage and get that paid off so you can be able to be debt-free and be able to leave something for you, your family, and a lifetime of legacy. But before we get started, what is something in this industry that has been on your mind lately? Go ahead, Sean.
Should I say interest rates?
Sure.
Interest rates are definitely, I guess they're always on our mind, but, more so of late than, in many, many years.
Got it.
We saw a large uptick in interest rates throughout the course of this year. However, the last 6 days have been very good. We've seen some very nice improvements. So I thank you, Lord, on that.
Yeah, you can finally breathe a little bit, you know. You can finally have a conversation with a real estate agent or a buyer that seems more positive rather than when they ask you, it always has to be, nope, still going up. Now we get to be able to say, hey, it went down a little bit, but interest rates, they kind of move in a stair-step fashion. So when they go up, then it kind of go to the side, go up, go to the side. So hopefully this was, the start of a downturn going that way.
Yeah, usually they go up fast and down slow. However, the last 6 days, they've actually went down fast. So inflation went down. So, when inflation is high, rates are high. When inflation goes lower, rates go lower.
You got it. I agree. And Gabriela, what has been on your mind in the industry lately? And come on over a little, please, by the way.
We'll get all close together. Yeah. Really what's been on my mind is just how buyers are reacting to the market. We're seeing a lot of buyers who've been very hesitant about the rate increases. And so they are also pulling back on moving forward with whether it's house hunting. I was at an open house this past weekend, and there was a lot of groups coming in, and that was just like the resounding topic for them is like, we're kind of ready, but the interest rates. So they kind of go hand in hand.
Yeah, I learned this from Sean. We preach monthly payment,
Yes.
Does the monthly payment work for you? And when buyers get into our sphere, when they're trying to get pre-approved or they've already been pre-approved, looking for a home, we're always preaching like, what is the monthly payment going to be? And then even more than that, how much interest are you paying over the life of the loan? People don't understand that, difference between a 6.5% rate and a 7% rate, it'll have a slight difference in interest over life of the loan. But if somebody's really trying to play that game, you're more going towards a 15 or a 20-year mortgage than a 30-year mortgage if you're trying to play the interest game. So overall, for your average buyer, though, who's not trying to play the 15, 20-year game, what's the monthly payment? Is it going to work out for you? It's much better to get the home now rather than to wait a year or two where nobody has no idea of anything that's going to happen.
And what's coming up in conversations when we're talking with listing agents, buyers, like, a 2-1 buy down is a hot topic right now.
Yep.
I didn't know if you were going to hit on that at all or not.
I just made a video for it about 5 minutes ago and actually have it in the presentation too for us to go over it. I mean, I probably had 5 real estate agents in the past couple of days text or call me. Hey, what's a 2-1 buy down? How does this work? How can I use this when I'm trying to list? How can I use this when I'm trying to help out a buyer? It's a hot topic.
Yeah, adjustable rate mortgages, that's coming up more. We started I closed my first 2 adjustable rate mortgages in this month, and I haven't closed any probably in the last 15 years. So that's a nice alternative.
They are.
With lower rates than what the fixed rates are actually.
And some buyers get really weary when they start hearing anything besides fixed rate. These are not bad products. As long as a buyer understands that, hey, I might want to look towards every 1 year or 2 years, maybe towards refinancing or doing something of that nature, then it can still be a great product for somebody. If you're somebody that wants to just get a mortgage and not think about it for the next 30 years, it may not be the product for you. But if you're someone who's like myself, every single year in January, I look at mortgage numbers. I look at where my home is at. I look at, should I sell my home? Should I keep my home? Should I do a refinance? Every single year I'm doing a financial planning for my entire family. And so when I do that, I'm the type of guy that, one of these products could potentially benefit me because I'm already going to be up to speed on what's happening. But
sure,
different products are better for different people. And those ARM products, being able to get, I think your ARMs were in the 4% that closed.
Yeah, and they're on 5-year ARMs. They're fixed for 5 years, and then it can adjust up or down after that.
Yep.
But like if it's if for primary residences, vacant second homes, there's no prepayment penalties on them. So if rates come down a year from now, you can refinance. Rates come down 2 years from now, you can refinance. If rates don't come down for the next 5 years, your rate's fixed for 5 years, and after that, it can adjust up or down. But that gives you a long period of time for rates to come down.
Yes, you got it. I love it. Well, that was just a teaser for it. Let's go and get into it.